Well, good morning. Welcome to Risk Neutral Trading. This is my live virtual trading journal. I stream every morning from now at 0800 Central Standard Time until 1500, which is the basic cash close. It's the 17th of October, 2025. Man, is time zooming by, doesn't it? All times that I refer to here are Central Standard Time, and that you see on my charts or my screens. This is not for financial or trade advice. Past performance is not indicative of future results, and trading futures, equities, whatever can ruin your whole freaking day. can ruin your life. It's the usual disclaimers, but it is true. And one of the most important phrases or sentences that you probably hear every day and pay little or no attention to is the past performance is not indicative of future results. That is not some lawyer boilerplate. That is probably one of the most important statistical facts that you need to take on board as a professional. If your goal is to make trading a business, a sustainable, consistently profitable business, that's really important. So talk about that later, but there's a disclaimer here in the description. I'm not monetized in any way. Welcome to the stream. I'm in it for the likes and subs, so do that. And also drop something in the chat. Let me know where you are, what you think, etc. That's always real interesting. We don't have anything reporting here. The children are still busy. Still busy playing out there, playing instead of being in Congress like they're supposed to be. In the government, it's still on shutdown. So this is Friday the 17th. This is what we have for reports, which is essentially nothing. Of course, the non-farm payroll this is now the third Friday that the non-farm payroll has been postponed, or pretty soon pretty soon it's just going to be canceled, I guess. My thinking is they're probably trying to, I don't know, conspiracy theory here, but if there's no numbers coming out, then there can be no one saying, oh, well, the economy's doing this or that, right? So that's a possibility. This is the investing.com. It is my first news source for years. I like it because it's a good presentation to screen snap and share with other people or in Discords or something like that. You can filter it for your time zone, your interests, your country, whether you want 1, 2, or 3 stars, all that kind of thing. And there is you can look out tomorrow, the next week, whatever. And it's important to know that we are in earnings season again. Primarily the financials here so far. And in the beginning of this is today. The little star or the sun means they report before the market open, and the little half moon, like down here, or quarter moon, is after the close. Next week, we're going to get some regular ones. We're going to get GE and Coke and, Texas Instruments, and it's going to start expanding. But right at the moment, we're into the financials. About 3 weeks of this nonsense, and that'll be over with. The next order of business here is, or more recent news source that I use, is the Financial Juice. Also free. You can pay for it if you want to, but, you can filter it similarly. And it has kind of the same basic docket here, or calendar presentation. I don't like that screen snap or that presentation as much to put other places, but whatever. And the one advantage that it does have, why I use it now, is that the right side over here is much more of a squawk box kind of here Trump said something at 7:04 and said something again at 7:05, and the Treasury Secretary said something at 7:16. You know what I mean? It's kind of a squawk box. So there's that. And now let's zoom on to the most important thing that we're all interested in, which is the pre-market and the analysis and what I think is going to happen here. Well, here, this is a full session. First of all, this is the ES Mini, NASDAQ Mini. These are Renko charts. This is the my high time frame or micro composite for the ES Mini and the market profile for the ES Mini. I also plot and track the same configuration for the micros, but that's for those session prices and things that I push and share with people. Anyway, this is yesterday's RTH session. Here is the open of the overnight. Pretty dismal. They didn't like what they heard there too much, and that was a lot of political risk again. What does this say to me or us or you, hopefully? Our inventory is essentially 100% short overnight, isn't it? Why do I think that? There's the open, and here's where we traded. Now, you could make a case for the fact that we're right back pretty much at the RTH Open. That means that all of this trade and all this inventory is short. So what I expect is, in a condition like this, it's not rocket science, it's common sense. If I were short all night, now, granted, this has evened inventory up to here. But if I were short all night, I would look to take some profit in the RTH, right? And that is, so that would mean responsive buying. And then probably go into a rotational and then see where we're going from there. The micro composite here is my higher time frame chart, as I said. This is the RTH session only. These are daily bars or candles, whatever you want to call them. And wherever price overlaps, I pull a volume profile around them. In so doing, it generates a micro composite VPOC. It generates the high and low volume nodes, which are represented by this red and green lines, and they are the high and low volume nodes for the volume profile here. This black volume profile that you see on the right is the for all of the data, and it goes back for the ES. Obviously, I know the Z contract didn't go back to 2021. The continuous contract did, but this is how IRT presents it. And this black volume profile represents the data, all the data that I look at from December 16th, 2021 to today, through today. Market profile, I guess that's self-explanatory. These are called TPOs. They're 30-minute brackets. It's a different presentation of the same data. Doesn't have time. Time, price, and opportunity is what TPO stands for. Again, we're high in volume so far. We're percent change is 0.06 negative up here. Let's look at our volume so far. And this is probably RTH, yes, 155%. Let's look at the full session. I always forget to change that. Okay, wow, 289% increase in volume over average for this time of day. And we're pretty high in ATR. We're at 5.75 average true range for a 5 minute in the ETH, which is this is the RTH. Okay. Let's go back to now. The next order of business is, as I mentioned, I push these session levels or these volume high and low volume nodes to Bookmap, and as I do the session prices, which brings us to Bookmap. Boom, here we go. This is the dome or the order book or whatever you want to call it. Hope you understand that. And it's full level 2. This is the micro composite chart where I enter the high and low volume nodes, the POC, gap high, gap low, all that noise. And this is no good anymore. My workflow, I've had some issues. My workflow is that when a level has been revisited, I change the text to black, and then on the weekend, typically I remove the stale level. Here you see a naked volume pointer control, and here's another one that was traded over from, this is the, another one traded over from the 12th. I'm not very, I had some data issues, so I'm all unorganized here, kind of. Sorry. So there we go. Now let's move on. This is the high and low volume nodes pushed automatically from Bookmap. Interesting little cluster we have down here, huh? This is where we went zooming through that thin air out there. This is the full session volume profile, which started plotting last night at 1700 and will continue through 1600 today. This is the RTH volume profile, which will reset this morning at 8:30. My notes column, which is real important to me. And these are the session prices pushed from IRT to Bookmap. Now, you'll notice there's no indicator on my charts or my Bookmap, unless you want to consider the VWAP for both Globex and the RTH session as an indicator. They are calculated, so, let your conscience be your guide. But what I typically have in addition to those lines, and these lines here are, and the titles are just, they are just a line to draw my attention to this level, which is the session prices. And they are pushed and powered by the exact same data exported from IRT. And I share these levels with anybody that's could use them. So no problem there. Free, by the way. Just, like, subscribe, and drop something in the chat, and I'll be happy to hook you up. There's nothing complicated or mysterious about anything that I do in trading. So I think it's really important to be upfront and truthful about that. So many people try to make it seem like there's some secret sauce, mumbo jumbo, hocus pocus. Oh, this is my special indicator crap. And you can bet your sweet ass that they're trying to sell you something, or they're making their living off of YouTube subs. Anyway, the POCs are nothing more than the price. They mark the price at which the most contracts have traded so far in the session. So 63, 66, 63, 75, or 64 is the price at which the most contracts have traded so far since 1700 last night, 4118. The very split second, the nanosecond, that 4,119 contracts trade anywhere else, this line is going to move there. That's all there is to it. This is the mid. That ought to be pretty simple to understand. For the RTH session, as I pointed out earlier, the Globex and the RTH session VWAP, which is the volume weighted average price. Some lines that oftentimes confuse people, which I don't see here at the moment, but we'll find one of them, I'll bet you. There we go. And the IB high or low. Oh, okay. That's confusing, I guess, because of the naming. It's an old market profile naming convention that stands for initial balance. These two lines on levels, flags, whatever you want to call them, are nothing more than the high and low of the first 1 hour of the RTH trading session. So this reflects, right here, is the low of yesterday's RTH the low of the first 1 hour of yesterday's RTH trading session, period. And the second we open, this is going to jump to the low of whatever we're doing, and it will continue to move down with price. The IB high will continue to move up with price until 9:30 Central Standard Time, at which point they will stop. Period. Too easy, isn't it? And you'll see these highlighted areas here on the heat map that reflects resting liquidity. You know, there's 124 contracts sparked out on the 80 handle, and that's it. Okay. I think that pretty well. Yeah, the statistics. Now the notes column is really important because first thing I do is determine the open type and change the title of this column to that. And I do that because when I look at a screen snap or the recording, just knowing that the open type, this title is accurate, gives me a lot of information. I'll be right back. All right, so once again, I hate these open situations where we're fluffing right around on the close. And let me tell you to identify the open type for the upcoming RTH session is only got two parameters. If we were to open right here, right now, how would that open compare to the previous RTH close? Well, it would be one tick above it or maybe right on it. Let's pretend that it's one tick above it, so it's higher. And where would that open compare to the previous RTH range? It would be within range, higher in range. Now, I hate it when they do this because it affects the statistics. These statistics, which I put in every day, come from the study in IRT, and they are driven, or I select them by the open type. So the next order of business is to clear the custom notes like that. And I'm going to stick with higher in range until something else happens. And let's look at the study. Once again, this is real simple. Or I should say, I don't mean to imply that trading is easy or simple, but it's not mysterious. It's logical. It's data-driven, based on probabilities and data. That's all. This is the open study and statistics. Now, here is higher in range conveniently, IRT highlights the correct open type. They will only do so after 9:30 or after 8:30 Central Standard Time. This was our open type from yesterday, so I'm expecting that will probably do the same thing today. Again, very simple. The study looks back at 2,000 trading days. Of those 2,000 trading days, we opened higher in range, 611 of them for 30%. Of the days where we opened higher in range, price revisited the overnight volume point of control 510 times, 83.5%. Overnight volume point of control, 83.5. So that's all there is to the statistics, to assigning the statistics to their associated price level. Now, I'm not going to put them all in here because I'm not sure how we're going to open higher in range, lower in range, and there's not a hell of a lot of difference. For example, the POC is fairly close. It's 83.5, or if we're lower in range, it's 84.3. It gets a little wonky when we get further away. Previous close, for example, 70.4 or 73.7, you see. So typically we typically, then I just go down the list. The overnight volume point of control, or overnight mid, I'm sorry, is 76.9. And that is right here. Okay. And I want to put the IB low in here or something just to show you how I do handle that. The IB low, you see, is from yesterday, is 61.7. Now let's look at what the IB low would be over here. That would be 61.5. Well, there you go. Pretty damn close, right? So 61.7. We get back over here, and there's the IB low. So I put in 61.7 and IB low. Because, remember the definition? The second that we open, this flag is going to go to the bottom or the lower price of the open and continue to move down with price for the first 1 hour. And the IB high is going to do the opposite for the high of price the minute we open. So this is going to zoom over here someplace, probably if we open right here. And now I'm going to, let's see what else do we have here. Overnight highs, 75.5. Overnight highs, and even over here. Overnight, here's a big difference. You see, the overnight high when we're opening higher in range is 75.5% probability. Overnight high when we open lower in range is 52.6. Mm-hmm. Makes a hell of a difference, doesn't it? So I'm not going to put those values in there until we actually get going. And I just hate it. I hate two things. I hate always bitching about the fact when they do this. And second of all, I hate it when they do this because it prevents me from doing my typical workflow. Now I'm going to do something that I do every day at 8:20, which is the TLab snap. And you ask, what is that? Well, it is a book map Discord chat room called, where did I go here? The Traders Lab. So anyway, let's get back to the business at hand here. The TLab, I forget what the hell I was even talking about. Sorry, somebody distracted me over there. I make that post every day at about 8:20, and let's get back to the business at hand, which is the next thing that's pretty important to be able to do before we open is be able to trade, huh? I'll finish the statistics at some other point here after we've opened. To be able to trade with Bookmap, you have to activate the trade control panel and select a way you're going to trade with your mouse in the application. If you choose chart, the only place you can trade with your mouse is the chart column. If you choose dome, the only way you can trade with your mouse is the dome columns, and both is, guess what? You guessed it, both columns. Now what I do is select multi-brackets, and this is the smallest risk-neutral package that you can use because you must have an even number of contracts. 2. Then you select your stop size, and the first criteria that you need to use for this is what is your account risk parameters? What are your account risk parameters? That's first. What's the market doing? What is the instrument you're trading? How is its volatility? Its liquidity? These things are huge. Once you have established these two parameters here, the first risk neutral scale is automatic because it is for the same number of ticks as the stop is a loss, same number of ticks positive, and for half of the package. The minute you have achieved this, you're risk neutral. The worst you can do on the trade is scratch, unless you have real issues and you move your stop away from entry. And then you have a runner. And if you do 4 contracts, there you go, same idea. Real simple. And then I close that, and now I confirm that I have the right package selected. Because I've chosen multi-brackets, I don't need the rest of these tools. And if you notice that I have all the trade and parameters up here that I have reflected over here. So I can confirm the package size. I can click the button again. I get my screen real estate back, and I have all of the same trade parameters, plus I have cancel and close all. And there you go. Now we're ready to trade. I think I'm up to speed. Who the hell knows? Yeah. And I guess we go. We're going to open here in about a minute. I will change the RTH, the charting to full session after we open so that the alignment is correct with the yeah, so the alignment is correct. What can I say? I wanted to share something here with somebody that I am going to need to do this. Actually, I'm going to wait till after the freaking open. There we go. And we've opened. Now watch the IB low and the IB high come zooming down here below. So what did we do? Well, Bookmap will highlight it, but it looks to me like we opened just about exactly on the close, maybe a tick above it. That's pretty weird. And I'll start flagging the VPOCs here. I don't really need to do so much anymore, but, you know, old habits die hard. And the reason I don't need them or rely on them as heavily as I used to is because I now use my Blue Boy, which is real top secret, very expensive indicator that you can only get if you pay me a lot of money. It's a vertical line, you know. I put a vertical line on the session start every day of each session like that, and it didn't work. Okay, we'll do this then if you're going to be that way. Call it that. That tells me, as long as I can see that, it's nothing more than a visual reference. As the day progresses, I want to make sure I can glance left and see this blue line right over here on the left side of my monitor. That means I have the entire session in range, so I can keep a firm grip on the context for the day. That's all there is to it. There we have the IB low. There we have the IB low high. You see that this started about 30 seconds ahead, so it's not quite together over here. I'm going to let that breathe for a little bit there, you know, like a good bottle of something, and I'll get back to what I was doing on the other side of the coin. Boom, boom. Man. Oh, wait a minute. I don't want that. That's not what I want at all. I want this. Where'd that? Okay. Let's me get back over here. Over here. Okay, boom. There we go. Now I don't know what the hell I'm even doing. I guess I should. The reason for the stream, that might be important. I don't multitask well, and I believe journaling is important. So I'm able to capture everything on my monitors here in the stream, real time, continuously from 8 o'clock this morning until 1500 today or whenever I shut it off. And my narration here, my voiceover, gives insight as to what I was thinking. So I don't have to screen snap or type or do anything else to keep my journal up and to keep everything in sync. And it's much more intuitive for me to go back and review. Something's going on here. What is it? Much more important for me to go back and review the stream in real time with, you know, the market is moving and then I can hear what I was thinking than reading a journal. That's for damn sure. Getting some kind of a drama here about art rhythmic. I don't know exactly why, but let's, goddamn, see if I can figure this out. Well, it looks to me like IRT is IRTing, I think. Isn't it? Or not? I'm wondering if rhythmic is happening here. It looks to me like it is. I'm getting price moving in Bookmap. I don't know why IRT's playing hard to get, but I don't see the heartbeat. There we go. Now the heartbeat's moving. Okie dokie. Huge lag time. Look at that. 88 milliseconds. Why? Don't know. I'm on a, I think 2 gig or 2.5 gig fiber optic. That's the fastest they've got here in where I am in Houston. They don't have 10 yet, I guess. I don't know. And this is AT&T fiber wired directly to my router, so should be pretty accurate. I just want to be sure that everybody's working okay here. I don't know what this damn thing is, but I'm not liking it much. I'll let it think here for a little while and see what we get. I've got Blue Boy in there, so I'm all set. Volume IB low, IB high per rhythmic, which is a little, per IRT. Remember these levels, and these are pushed from IRT. Now what I'm going to do is resets, I guess. Clear resets, maybe. Reset now and reset. I'll double click. See if that works. And then give it a minute to think about that. And clear the reset. Such a drama. I seem to be having some sort of a problem with the time, the rhythmic server clock being off my computer clock for whatever frickin' reason, which is, my computer syncs. I have a special task created for my computer to sync to the time server every morning at 7 o'clock. I also have, if you run rhythmic in admin mode, you can have it reset your computer clock to match the rhythmic system clock every 2 minutes, which I do. So I find it a little bit hard to believe that this bullshit doesn't work, frankly. And now I'm going to cancel the reset, clear the resets, and see if that does something. And the answer is no. I don't know why the IBI hasn't shifted yet, but maybe we're still having drama updating data over here on IRT, which is what it looks like. Looks like the IRT data's quite off. Well, I don't know what to tell you, but, here we are, Friday morning. TGIF, I guess, eh? Now, as far as my levels go, and, I obviously IRT is automatic and it has everything's right. Here's the problem. We don't have data coming from rhythmic. And I don't know why yet, but I'm going to figure that out here pretty quick. Okay. According to the rhythmic guy, everything is working just Jim Dandy over here. I don't want to shut off rhythmic. Seems like it's up to speed and working, so I don't know what to tell you. We got all the little green lights down here going on. I don't want to have to kill rhythmic and start over if I can avoid it. Looks to me like we're trading out okay over here on, I'm going to shut down IRT. Always some bullshit. I'm sorry for my French, but you know, there's always something going on. Been a hell of a week, actually. And not in a good way. Not in a good way. Okay. Give that a minute to release the memory or the RAM a little bit here, and looks like the delay is gone off a bookmap now, so let's fire this up. Yeah, come to think about it, it's been a pretty crap week from A to Z. I mean, no, it hasn't at all. Well, what do we got now? Let's see. Heartbeats plucking along. Data seems to be okay. These are the naked volume points of control in my micro composite, and I just have a show hide button there. Obviously, that's a little bit much. Whatever it's doing up here, I don't like the looks of. Oh, it's updating the data, I guess. I should have given it a minute to think. I'll show you that in a minute. Get away from that for now. Well, we got the IB high and the IB low. They seem to be right. They align with the volume profile. That's a good thing, huh? Now let's get our range about where we want it. I try to keep the range at about a point high. Kind of like that right there. And I keep the entire session context in range. We're selling off. Have you gotten through thinking over here yet? Okay, now we're going. Okay. I guess we've got everything in business here now. We're in the RTH session. I know what we need to do. This is the micros. And we need to get those in the RTH session also. There's only one reason, there's one main reason that I do this every day, every session, RTH session open, and that is to keep the value, the session flags organized properly, and I'll show you that right now. The session prices I push to bookmap, as you know, and I share those session prices with anybody that can use them. I just got through posting the link over at TLab for some people that were wondering where they could find it. Anyway, I'm happy to do that. So The developing value area high and low refers to the current auction. The value area high and low refers to the previous auction. Now, in the overnight, in the ETH session, up until 8:30 this morning, the value area low or high was correctly referring to yesterday's RTH session. But the second that we open the new RTH, what is the previous auction? It's the just concluded ETH. And that's not what I want to have, because all of the people that lean on those session prices expect this to represent the previous RTH session. So by changing my IRT chart from full session to the RTH only, or the day session only, the value area high and low now accurately reflect yesterday's RTH session, and the developing value area high and low are for the current auction. Ba-doom. Yeah. What can I tell you? That's why, and that's the way it works. And yeah, here we are. What is going on now? I'm missing stuff here. At some point, I've got some pretty disturbing news to share. Not, certainly won't disturb you. Well, it may disturb you, but it was disappointing for me. And let's see here. Remember, we have two POCs. We have the brighter or more vivid one, which is the RTH session, and we have the more muted one, muted yellow, which is the full session. Also remember that the POC is just this line tracks through the day. It is only a continuation of the plot where the most contracts have traded so far in the session. A minute ago, it was up here. Now it's down here at 2774. The very split second, one of these levels says 2775 or whatever the current number is. This line's going to move there. Boom. Easy. Not mystical, not magical. You do have to wear, your wizard hat and have a magic wand, but, other than that, no. It's like the rearview mirror guys, that, well, yeah, I took this and I saw when we topped out here at the IB high and a double top and I got short. And yeah, it's so easy to do. Tell me what you're going to do right now. Tell me where price might head right now. What's your trade? That's the hard right edge. This is trading. This is BS. Sorry. Anybody, my daughter, stepdaughter here, daughter, doesn't trade, doesn't have any use for trading, but is computer savvy and intelligent, and she can easily give a running narrative of what price is doing and where, oh boy, I got short up here at a double top and then went. It's junk. Anybody can do that. That's kind of frustrating about some of these people who don't. To me, it's frustrating about. I shouldn't say that. This is exactly why I trade live and live on the stream. It is completely 100% transparent and accountable. No trades taken off the stream. My charts are open from 8 o'clock in the morning until 1500 at night. I stream if you notice, I stream the entire monitor, not just the application. I do that intentionally so that any open programs can be viewed down here, as can my computer clock in hours, minutes, and seconds, and the date, which ties back to the date on my charting in my book map. I don't want any, first for my reference, and second of all, if anybody is, keeping an eye or in, joining in on the stream here, that there's no question in their mind that this is just me trading it. And I'm happy to share this. This is my virtual journal. and I'm happy to share, and hopefully it could help somebody, or entertain somebody, or be funny, or whatever. So what is going on now, huh? Okay. What have we got befalling us in the? Obviously, we know that there's no reports, okay? And as I said, we do have a more of a squawk box idea over here. U.S. Treasury Secretary Bessent. The World Bank needs to end support for China. Who the hell are we? Why? Oh man. Anyway, let me just make a statement here about the news and risk, in my opinion. I don't have a political opinion or statement at all, implied or suggested here in the stream. Look at that. That is something. Somebody just said something. However, as traders, if this is your trading, if you're just doing this for a video game or an adrenaline rush and you like to gamble, who the hell cares, right? Do whatever you want and have fun. That's not a problem. But if this is your business and you're developing your business and you need it to be, obviously, as a requirement for a business is to be consistently profitable, right? They liked what somebody said. I guess it's that the only news I see is that the majority leader, Jeffrey, says the House and Senate Democrats are continuing to hold firm. I don't know whether that would do this to the market or not, frankly. But, okay. What I'm getting at here is the following. We review our numbers and our reports every day for a reason. We are running a business, and we want to be aware of any potential risk that could impact that business or our trading. We track the FOMC rate decisions. We track non-farm payroll. We know that non-farm payroll, unless there's a bunch of children in D.C. are throwing their toys out of the cot, as they are now with this shutdown, non-farm payroll comes out at 7:30 the first Friday of every month. And it's a 3-star event, and it's high risk. We know that, and we prepare for that. however you prepare for it. I stand aside. Whatever you do is up to you. But we want to know that in advance. You don't want to be standing here, yep, I'm a trader now, and then all of a sudden non-farm payroll comes out, and you go, well, wait a minute, what the hell happened to all my money? Right? So we now have, and looping back to my no political reference or position, we now have a situation where we have a continual, unexpected potential critical risk to the market, to the auction. And that is simply, if you don't believe me, go back and look at last Friday. Donald Trump came out and made a tweet at 10 o'clock in the morning, and the S&P sold off 227.75 handles. And that's been completely walked back. Oh, no, we're not really going to do that. We're going to have a good thing with them. I'm going to go to the meeting in Asia and meet with Xi and all the stuff. I mean, it was just, whether you call it a knee-jerk reaction or, he was given a signal for insider trading, or who the hell knows, I don't care. The point is, we have an ever-present, really potentially very critical risk that we can't identify. And you need to be aware of that. And therefore, a lot of the stream, my position now is to take only structured, vetted A+ setups. Always have my bracket order in. Sure, your stop is a limit order until price gets there, and then it converts to a market order, and you may take a bunch of slippage, but you're going to get out. Just those risk management. I mean, your number one mission in life as a trader is to preserve and grow, compound your account. And the first tenet of doing that is risk management. If there is a potential unexpected, highly critical, impactful risk out there, it's important to be aware of that potential or that, possibility. So there you are. And what else is going on here? I don't know. So we are at the down at the crossroads. Got down on my knees. Oh, okay, I won't sing Cream. Want to, though. Our market on open imbalance is pretty slim. Last night was huge. 2 billion something or another contracts to sell on the S&Ps. So I hope that's clear about the market and my, commentary here. I probably tend to, be sarcastic and joke more than I should, but what the hell. Not sure what exactly is going on with the stream, whether there's people watching or not, or seems to be jumping and jerking around a bit here. I don't know. Getting a data latency spike with a rhythmic connection. I don't know what or why to do, but now, just as you want to be really aware of potential risks from, the news or wherever, you're getting this right here, you better, your spidey senses better be up that you could be, there could be a potential problem heading your way for trading. So I'm on guard. What else am I forgetting to do? Nothing. Well, we're getting close to the... Now, along the lines of all of that, quite a bit of range we got going on here so far. Pretty quick, we're not going to be able to have our I try to have a 1 point price level setting, and obviously Blue Boy's on duty over here, so I keep the entire context in range. What can happen is when we get such a wide range, pretty soon I can't keep the 1 points going on anymore because it won't plot properly. Yeah. Now, the trades that I have been vetting and which I have traded exclusively now for some time in the vetting process are the IB trades, and they are based on the initial balance. We know the definition of the initial balance from the pre-market. It is simply the high and the low of the first 1 hour of the RTH trading session. Well, we don't have an IB set yet. Therefore, the IB statistic is not a thing yet because it's only 9:02. None of those will apply until 9:30 Central Standard Time. But when they apply, the IB statistic, it's based on the IB statistic, which is been around since, Christ was a carpenter, I think. Got to do with from the market profile days. When I've heard about it anyway. And that statistic is pretty significant, and we can easily see what it is in our we open lower end range. Oh, so let me quickly change this to lower end range. So now some of those statistics that I have input are not applicable, and I'll need to adjust those. And I only do that because of the recording, right? I don't ever change this stuff after the fact or tomorrow or whatever else. But anyway, so in IRT, as I mentioned earlier in the pre-market, they very conveniently highlight the correct open time. So we did open lower in range, not higher in range. So there's some statistics that are off. 83.4% higher in range, 84.3%, just backwards. Isn't that funny? Flip-flops. Is the situation for the overnight volume point of control lower in range? Now I will change that to 84.3. Wasn't that it? Yep. And there's some others that'll change, I'm sure. Whoa, I don't want to have all of this noise going on over here, though. What's all of that? Cancel. Oh, I see what it is. There we go. Okay, now let's get back to the business at hand. So the IB statistic, obviously it's not a thing until 9:30, but after 9:30, there is a greater than 97.9% probability in all 4 open types, and coincidentally in the open type which we are experiencing today, lower in range, there is a 98.1% probability that the IB high or the IB low will be exceeded by price in the balance of the RTH trading session. In other words, between 9:30 and 1600. And to repeat once again, these values, these statistics are predicated or calculated from a data set of 2,000 trading days, minus 1, call me a liar, and a subset where we open lower in range 586 days. These are the probabilities. They're not hard and fast lines in the sand, they're probabilities. But look at this across all 4, 98.1%. What does that mean? That means that there is a 1.9% probability that we will take out neither the IB high or the IB low. So that's pretty significant, huh? Now we'll get on with the day and the price levels and the narration here. Hey, Panda, what's up? Yeah. What are you doing? What are you doing, little kitty? What are you doing? I can't go out there or roam around the house. Oh. All right, so I got the cat story under control here, and Panda was looking for Antonio, I suppose. She's cheating on me probably again. That. So back to my vetted trades, and I hope that it was a clear. I hope the initial balance and the associated statistic is really clear. Now we're having VPOC migrations here. You notice right up to almost exactly on settlement. Wow. Anyhow, let's get back to it. So I am vetting and only focused on taking there are 2 trades associated with the initial balance statistic. One is the IB failure. It's 9:30, price trades up, goes through the initial balance. Let's take it to the high side, equal to the low side, just loan fair, reverse. Takes out the statistic, can't get any higher, and reverts back to the mean. The IB failure is just a different name for a mean reversion trade, outside in, based on the initial balance statistic. The other initial balance trade is an IB continuation, and I'll bet you can figure out what that is. Price comes up, takes out the statistic, pulls back a little bit, doesn't find any horsepower lower, and continues on in the direction it was going. Pretty simple. Now, those 2 trades are kind of are suggested, as is everything else through the day, or supported, or whatever however you want to look at it, by the context of the session. Okay, so we are essentially rotating around a 41 to 85, so about a 43 handle range. That's pretty wide for the ES. That's, in my opinion, kind of directional. Yeah, we're moving, we've only rotated once, and we seem to be rotating higher. The volume, or the POC is migrating higher. The reason that I want to understand that is because the mean reversion trade, or the IB failure, is suggested, or would be suggested, in a balanced or rotational environment, right? Because it's mean reversion. The IB continuation trade would be more anticipated in a directional environment. It's pretty straightforward. You know, it's just common sense, remember. So now what I'm doing about all of that is over here. And this is my backtesting tab. These are this is the backtesting rules for and setup, system for the IB trades. I don't use this during the training session. This is for backtesting. And here is the associated chart. Now, this chart is not connected to this at all at this point. However, these levels, which are custom, these lines here are custom indicators that I have built and put on this chart, absolutely, specifically, and accurately represent the levels and the rules or signals from the system. So this gives me an opportunity to visually confirm that a signal is firing where I expect it to. For example, are these basic tenets rules, are they working out? Does it make sense? Visually. I backtest them also, but let's go with visually during the live trading session. So now, first of all, you'll notice that there are these various levels associated around the IB high and the IB low. But they're not plotting over here yet because there's no initial balance yet. It's not 930. And I want to remind myself of that, so they start plotting at 930. Same case for the signals markers. These are just signal markers, and I don't bother specifically tweaking the code so that they happen in sequence, because this is essentially for my visual confirmation, and I know that they need to be in sequence. Yesterday, I took an I, a B, and a trigger, and I almost got stopped out, but didn't, and I took a full 62 ticks profit. And no more trade signal, then I didn't take one. Simple as that. So now, let's get over here a little bit. And let's watch what happens today. Remember now, this is really a graphic, perhaps simpler than Bookmap. IB high continues to grow with price, and IB low continues to go with price until 9:30, which is 15 more minutes. Something has got this market excited. I don't know what it is, but great. Good for us. Hate that damn thing. Now, that's what I'm doing. This is my trading journal, and so it's important to point out, I think, at this point, that this whole thing has got nothing to do with my way or the highway, right? This is what I'm doing, and I share that. If you have some sort of, for example, if you've already vetted the mean reversion trades and you're doing great this morning with that, good for you. If you have some kind of thing that, you know, if your wife kisses you twice in the morning, you go long, whatever the hell it is, and it works for you consistently, profitable over a big enough data set to be outside the possibility of random distribution, good for you. Don't change whatever it is you're doing. And, you know, drop something in the chat. Let me know what that is. That'd be super. But at this point, we've got 15 minutes to go. We're pushing this high up. I think, in my opinion now, where'd Blue Boy go? Come here, you little sneaky devil, hiding on us. This guy's, you know, slacker. He likes to get out off the edge of the screen and take a nap, I think, at it. And again, for any new viewers, this is a top secret, very expensive indicator, which is really just a vertical line that I put on the chart at the opening print of each session, only for a visual reference for myself. If I glance left, peripheral vision, I see this blue guy, I know that I've got the entire context in range, in view. And that's what I want to do. I used to keep a 5-minute spread down here, which we're doing at the moment, but pretty quick we will not be able to maintain that. And that's the reason that I was doing these migrating VPOC flags, because after the day progressed, pretty soon these lines continued to plot all day, of course, but they would scroll off the left of the screen and I wouldn't know where the POC had been. I realized how important it is to be firmly based in the context of the session. So I think Rod actually came up with the idea of putting a marker and keeping it, and I'll give him credit where it's due, because I've learned a lot from that guy. He's great. And he shares frequently, you know, freely, as we all do there. And I do here. And obviously, you see, I got it off a little bit. So what? Who cares? It's just lets me know that this is pretty much the first print within a minute or so, probably. And I can tell that this is what the context is. What did we do? Well, we rotated up. We got a little bit of, a little responsive buying here. Sold down. They didn't like it down here anymore. And here we go. Somebody said something they liked or. And we've got 10 minutes till the IB statistic sets. I'm probably way off schedule here. I just pinged the fella yesterday. My favorite chapter marker plug-in he's not bothered to fix yet. I'm sure he's focused on something that somebody pays him on Patreon for or whatever. But boy, it's really, I didn't realize how much I depended on it and how slick it was. I also have another what was I going to say here? I don't want to get all off on some tangent about backtesting because we're closing in on the IB statistic. We'll go over a couple other things here. I'm going to change this stupid thing a little bit. I have a range requirement that used to be a really hard point in my trade plan, but it's become more discretionary because I found I would stand here for days at a time without a trade. And it's real simple. If I have a vetted trade set up and trigger that would validate an entry, the range requirement is the final yes or no, or, go or no go on that. And it's real simple. Pretend that this is a valid entry for a short. Well, I need to have 3 points, unobstructed path. Well, doesn't 3 points. I need to have an unobstructed path to my risk neutral scale. And my risk neutral scale, as you saw from the pre-market and on the risk neutral package setup, is 3 points or 12 ticks. And why do I think that? Because watch price here. We just came down to the developing value area high. All right. Now we're going to take through it, maybe. Oh, we're going to react to it and go back the other way. If I'm going short, I want to try to eliminate any impedance to me getting to my first risk neutral scale. Right now, I would not be. You see, it reacted to price. This is an obstacle. Now, I'm more mechanical now with the backtesting because I want to hold with the signals and the rules. And also one more thing about the vetting of the IB trades. There's no trade management involved. The trade goes on, stand back. I'm not going to trail the stop. It is an absolutely cardinal sin in my world to ever move your stop away from entry, first. Number two, I don't practice any trade management while vetting a setup. In other words, if my T2 target is, if there's a likely area for a more, an extended T2 target to go to that, which you could do during in a normal trade, and manage your trade by trailing your stop up to swing highs, for example, or swing lows if you're long. None of that can happen when you're vetting a trade, because what you are trying to establish or to achieve is that you have a statistically significant data set outside that's large enough number of trades to be outside the possibility, as best you can, of random distribution. And all of those trades to be statistically significant and fit within the data set have to be the same. If I want to know how many trades of 100 trades, how many times did I achieve T1? Well, T1's got to be the same, right? It can't be 1 point this trade and 5 points the next trade and 6 points this trade. It's got to be the same in order to have a statistic. How many times did I stop out? Well, if the stop is at 3 points today and 6 points yesterday, or I move the stop away, boop, I've broken my whole methodology. So that's important to understand. And for you to do as well. It's not just me. Not just me. Okay, we're at basically coming up to 25 minutes here. I'm now going to, this is really important, a real important word of advice from this is the voice of experience. Do not, under any circumstances, trade to the statistic. Oh boy, we've got a couple minutes left. We're above the POC, we're above the mid, we're above the VWAP, we're close to the IB high. I'm going long. No, you're going to get spanked a vast majority of times. You wait for 9:30, you wait for the statistic to be satisfied, and then the setup for your trade. I have the data to prove it. I'm not going to bother finding it on my other computer, my old journal, but trust me, do not trade in anticipation or towards a statistic that has not been achieved. Well, first of all, by definition, it's not a statistic yet. Second, and that's just that's not being a professional trader or following the rules, in my view. Two minutes and change here. Now I'm going to maximize this chart. I've maximized the chart in hopes, and then we'll just see how the signals play out if they do. And I take these trades mechanically when all the signals and the rules are aligned for the purpose of vetting the trade. Now, it's important to know I'm going to base it on context. We're getting close to the IB 30, so I'm going to make sure I've got I'm on both. I've got the proper package selected. Okay. And here we go. Ooh, Mr. Blue Boy's hiding over there again. If you watch the stream a lot, you'll realize that this is, first of all, welcome and thanks. And second of all, trading is a lonely business, so it's nice to have some camaraderie involved. And I think it's important to know that the everything here is absolutely straight up accountable and transparent. Even at the TLab, Tom doesn't take trades live, and he doesn't call trades. And when he does his stream, hey, Richard, good morning. When he does his stream, it's actually rearview mirror because he goes back to before the session starts and, narrates along. So that's when I first started listening to or, found out about that. In those days, it was before this bookmap stuff got so, these various chat rooms got so official. And he used to just be live for like 4 hours streaming, and that was much more like what I'm doing. And that was more beneficial to me. I've already said that, my daughter can look at this and fairly accurately narrate something looking in the rearview mirror. But Mr. Richard, here we go. Once again, the children are still truant in D.C. there, so their non-farm payroll and all reporting was off the table today. They better get their crap together before the FOMC meeting, which I think is next week. We have a consistent migration of the VPOC higher. Looks to me like we are in a directional market, which suggests to me the possibility of the IB continuation trade more than the IB failure trade. Again, we do have an IB. The IB statistic is now in play. It's 931. So as of wherever 930 went, right there, we're in play. And you'll notice over here now that the lines have started to plot miraculously at 930. And look at this god dang range. Huh? There's the IB low and there's the IB high. 97 to 41. Wow, 50 handles. Oof. That's a pretty good range, isn't it? IB. As I pointed out now, it's a 98.1% probability in this open type of lower in range that we will take out one of the other, either the IB high or the IB low, at some point in the balance of this trading session, of this RTH session. In other words, from 930 until 1600. Other way to look at that is there's a 1.9% probability that we won't take out either. And oddly enough, that happened about 3 Fridays ago. We did not take either the IB high or low. I should have made a screen snap of that or kept it somewhere where I could use it as a reference, because it was an anomaly. I'm sure I've seen them if you stop and think about it. But I have, think about the statistics. And remember that statistic is based on my way of doing this. That is based on looking back over 2,000 trading days, not all time, not the history of the world, over 2,000 trading days. That's how I base my statistics. This is how my study works. Over 2,000 trading days, we open lower in range 586. We have a 98.1% probability we'll take out the IB high or the IB low. And taking out neither one of them is the inverse of that, right? It's 1.9%. Taking out both is 33.4%. So there you go. I couldn't remember the last time we did that, and I had said something about it, and sure enough, a couple days later, we did it. So, thank you, Statistics God, or whoever you are. Do you see why trading to the statistics not a very good idea? Wasn't a statistic yet, but oh boy, we're going to get there. We're above all these guys. Now where are we? Uh-oh. And believe me, that is just the voice of experience talking. If there's a mistake to be made, you can bet your sweet ass I've probably done it. So, not that I'm proud of that, but I'm trying to learn from it and turn this corner, make this what it's pretty. I mean, it's doing pretty well, but have to keep creating those instances to enable the law of large numbers to manifest the expectancy, and that's how you compound your account and end up with a statistically significant and consistently profitable data set, account and business, I believe. Unless you're like Richard here, who's just born rich. Sir Richard. I hope everything's good in the UK, Mr. Richard. It's about 25C over here today. That's 72 for all you effers out there. Personally, I wish I'd have been born rich instead of so damn good looking, and then I wouldn't be having to worry about this so much, huh? And you can probably tell I don't have a lot of mirrors around here. Looks like IRT and Rhythmic got their shit together as far as data goes. No lags, nobody left on third. Data volume is way high. We're damn near to 1 million contracts already. Wow. Am I looking at this? Yeah, we're looking at this. Okay, let's look at the volume here. And let's get this to RTH, I think. It's probably full session. Come on. Yeah, let's go RTH. 134% above average volume for this time of day. And look at what the hell happened to our ATR. Wow. 17.25 handles on a 5-minute candle. My goodness. Can that be real? I'm pretty sure that it is. Here we are. There's, oh boy, we're gonna spank China real hard. Well, maybe not. What the hell are we going to do now? I don't know. What do you think? It's just pretty crazy, isn't it? You can't laugh at it. What can you do? If you don't laugh, you'll be crying, because if you're from here and whatever, it's pretty amazing. It probably is again. Yeah. Didn't even think about that. Very good point, Richard. Yeah, third Friday, isn't it? But it's not any monumental. It's not, a triple witching or anything like that, but it is an options expiration. I think. I believe you're right. I'm sure you are. And we are in earnings season also. This week is pretty much all financials, and next week will start getting some companies in there. I think Coca-Cola and stuff's next week. Let's look. What's happening here? Oh, well, here we go. We won't see any manufacturing jobs until capacity gets built. Do you think? Did these geniuses just think of that? Oh, wait a minute. It's going to take 5 years to build these factories and modernize them, and billions of dollars to replace the supply chain that's been developing for the last bunch of years. It's like I swear to God, that doesn't seem to me. I mean, these are things that I'm sure we've talked about in the stream or amongst ourselves. Like, what do they think? How long do they suppose it's going to take before they could possibly replace the manufacturing that we import from China, for example? And then take it one step further. How much do you think you're going to get American workers to work for a similar pay? Or are the prices for all this stuff going to quadruple and nobody can afford them? It seems like nobody back there is really thinking. We went through the Industrial Revolution. We evolved to a society where we innovate and design the technology. And a country like China with a large workforce and super advanced manufacturing capability and technology and equipment and factories in place, take our design and our technology and manufacture those things at an affordable price for people of the world. I don't think it's going to be a real good ending to thinking we can roll back to the 50s, That's not, I'd love to be able to do that. I'd be a hell of a lot younger. And boy, would I not make a few mistakes I've made along the way, but I just don't see a good ending for that. I don't know. and I'm certainly no financial genius. I'm not a Jay Powell, and I'm not a moron. Like, I think this Navarro is just, I don't have much use for that guy from even the first time around. He doesn't strike me as thinking before he speaks often. Again, not political, but at risk, Unanticipated potential critical risk. Pretty crazy. Go back and look at Friday, Well, you don't have to go too far back. Friday. Based on a tweet, all of which, including from Trump himself, have been completely rolled back and, never mind, don't listen to that, pay no attention to that. I mean, really, no, I'm going to meet with Z, we're going to go to the meeting, I think we're going to have a good deal with China. I mean, this is unrecognized and I think unwarranted potential risk that is just, I wish they would stop and think about stuff before they do it. That's bothers me, If you or I operated that way, how long would we last? How long would we last? I don't know. Not doesn't present a rosy picture for me. Where's that blue boy? There you are, little devil. Really works well. You know, I make a joke of it, but it's I don't have to look at the timeline and all that. I can just nail it down in there in a second. I can't get the 1 minutes here now. We're up, or 1 points. We're up to about 1 1/4 here now to be able to get the scale in. I don't think. Check. No. No, can't do it. And where am I? Oops, I'm looking at the wrong thing here, but Blue Boy, we've got on duty now, and we can't get the entire range in scale and only have, or in view, and only have one handle high. We got to be more than that now. So 97, 41, 55, 56, 7, 8 handles wide on the IB. My. And the IB is still at range extreme so far because we haven't extended it, right? We haven't taken the IB out. I guess if you had to pick a day where you would bet money on the fact that we satisfy that 1.9% probability of no initial balance statistic, this could be one where we have a 50-point IB range. I don't remember what it was 3 weeks ago there. So when we had the when we did achieve that statistic, but anyway, and here we are. Yesterday worked out pretty well. 61 ticks. Got a little heaty there for a while. Kind of got pretty close to me, but Rod had a pretty funny post over in Static on one of his crazy. Look how God has taken care of me, and he had like the price had come up to within 1 tick of his stop 3 times, and then went to target. It was pretty funny. The same had happened to me, but only once. Let's see if I can see that quickly here. Here's the trade from wow. Here's the trade from yesterday. The IB signal, IB continuation, and T1 break even to the stop. Of course, didn't move anything. Price got right up there, kind of making you sweat a little bit, and then off to the target, and nothing happened in the meantime. So 700, and it did get 61 ticks instead of 60, so $762.50 rather than the typical expected $750, because that's what 60 ticks translates to at an ES $12.50 a tick. Boop. There you go. Well, they're kind of widening out the profile now, right? We're sort of getting in a more of a balance. Still pretty damn wide. Would give me pause now, though, to would I be anticipating an IB continuation or an IB failure? And let me point out once again that this is just my way, not the highway. If you're doing a 3-bar reversal, there you go. Here's a tweezer top. There you go. These are all, potential setups, which I have not vetted, but I know people that use them and make money from them, and they're pretty clear. So what I'm working on, and this will be the last week I'm vetting these IB trades. I will show you when we go through. I go through kind of an in-depth run through on the back testing later in the day. Just before the close, usually I try to get it in there in the last 30 minutes, before around 1400, just kind of in the power hour. Exactly how the trading system works and how back testing works and the advantages of doing so. And then I would be able to do those, I mentioned a minute ago that I couldn't look at trade managing something. For example, you were short here and price goes your way and you think, well, I still think we're going to have whatever target it is. I can't move the T1, I can't move the T2, and I will certainly never move the stop. So after that, I could scale up. I could trail up my stop and move my target further away, whatever form of trade management you want to have. But as I said earlier, you cannot do that if you're going to or your intention is to use that particular trade in your backtesting data set. What do we have now? 10 bells, huh? I've gotten so sensitized to this random risk, and anytime I see a movement like this or here, I immediately look for the news. I immediately assume somebody's talking about something. And I miss the days when we had scheduled events, you know, and we didn't have a crowd of people who are extremely fond of the sound of their own voice and, you know, camera friendly, but in my opinion, don't frequently or don't always engage their brain before they start their mouth. And that's dangerous. The risk, unexpected risk. And I think that that's not just my opinion. That's a fact, because look at every time something like that has happened, like last Friday, completely walked back by the Secretary of the Treasury, 2 or 3 advisors, and eventually yesterday and today by Trump himself. What the hell, you know? That's so it's a fact. It's not my opinion or a political statement. It's a fact. There you go. That's my story, and I'm sticking to it, baby. Well, we're poking our nose down here towards the towards that IB low. How low can we go? Now, let's look at the IB low here. Assuming we take the IB low statistic, we would be in dangerous range requirement territory, depending on the entry. Say we get in at 42, the first obstacle up here. Oh, no, that's a pullback zone. Never mind. I forgot to mention this probably, but these pullback zones and the, come on, pullback zones and the continuation zones are these. And I push these to my bookmap so that I try to have, you know, redundant everything everywhere. You'll notice that the developing VPOC is the same exact color and follows exactly in the POC and the IB high and the IB low and all that stuff. I think it's important, it is for me anyway, to have multiple places to look at stuff. That's why I like these price lines. They are the exact same data as the session prices. But I like having the lines here also, and that's why I push these continuation and pullbacks. Obviously, when I'm through vetting I don't know about obviously, but when I'm through vetting the initial balance trades and I'm working on something else, I will probably change these, I suppose. I might leave them there if I just continue to like the initial balance trades, which I do. So anyway, that's where that's at. But you know, I don't think I can have too much confirming data, but I don't want a gazillion levels everywhere. You know, some people I admire them, but I couldn't do it. You know, 1,000 levels on their chart, or you know, like 1,500 VWAPs, or all kinds of colors and things on the heat map, and bubbles and stuff going on every place. When I look at some of the screen snaps like that, and I'm not making any condescending comments or anything else, when I look at some of their screen snaps, and I appreciate that they share that, I can't see price. I can't tell really what the hell's going on. It's so much stuff. These little bubbles, these are the volume bubbles. I don't even make them 3D, which you can do. They're colored by delta, and that's good enough for me. And you see that I use the basic stripped down version of the heat map. You know, there's 258 contracts laying at the 67 handle. And there's that liquidity right there, that little thin line right there. That's good enough, I think, for me. There's a perfect example of the thinking behind the range requirement. We reacted to each one of these lines. There's the open, here's the developing value area low, here's the close, you know, and then of course the POC. We are reacting to each one of those prices. So if you're short here and you're looking to get scaled, you would have gotten so, but you'd have been sweating bullets on the way down. Because bing bong, you know, I don't need that. That's where the range requirement came from. And I think that actually spawned from one of Tom's thoughts, which he, and I like his euphemism, is there's not enough meat on the bone there. I'm not sure whether that's a Tom original, but he's used it plenty. And it's probably safe to say that exactly nothing in trading is original. You know, think about it. First of all, think about trading. Where the hell am I time-wise? Okay, 02. I'm going to make this close. Think about trading as a statistical business, not a video game or gambling. The first thing you've got to realize, or first fact that you need to recognize, is that this is a random environment. Millions of individual traders are making a statement one way or the other. You know, it's hard enough to get 100 people to march and step in a band, right? Think about it. It's a completely random environment. And that's where the statement, past performance is not indicative of future results, comes from. It's a statistical fact. Another fact is that the outcome of the very next trade is 50-50. This is a binary event. The market can only go up or down. Can only tick up, can only tick down, period. Doesn't go sideways, doesn't go at an angle. We put horizontal movement on it by time. Otherwise, it just fly up and down, up and down, up and down, up and down, up and down. And that's kind of what market profile does to a certain extent. So, accept the fact that it's a random environment and that it is a binary, and that the outcome of the next trade is 50-50. And what do you need to do to try to develop a profitable business? Well, you need to vet, identify a setup, and the parameters that validate an entry for that, and then capture a statistically significant data set of that setup and those data, those parameters. And statistically significant data set means you're outside the as much as you can outside the random distribution, which is easily understood. Think of a coin flip. If you flip a coin, everybody knows a coin flip, unless it's, you know, some tricky coin, is 50-50. But nobody would be surprised if you flip a coin 10 times and you had more heads than tails, or vice versa. Nobody would be shocked about that. That's random distribution. Flip it 1,000 times, you're going to be pretty close to 50-50. So you want to capture a data set of your setup and your parameters large enough to be outside the possibility of random distribution, you know. And when I talk about backtesting and in depth later on, 8 wins in a row, 8 consecutive winners, 9 consecutive losers. That's random distribution, perfectly normal in statistics. So you capture that, you determine an edge or not. And an edge is just the way you calculate, your statistics and your expectancy is, I'm trying to get my thing, in case you can't tell, I'm trying to get the chapter markers. Win rate is absolutely meaningless clickbait bullshit taken by itself. Means nothing. When you take it in conjunction with the proper other data, that it is an input to the formula to calculate your expectancy. And that formula is the win rate times the average winner minus the loss rate times the average loser. That gives you an expectancy in dollars, ticks, points, whatever whichever you're using to calculate that, whatever your I can't think of the word, whatever your bracket or your grouping is to calculate that. And then let's assume that you've done the IB trade and you've got a positive expectancy of, 10 points or 5 points or 1 point or something like that per trade. You take every one of those that presents itself in the live market, and you rely on the law of large numbers to manifest the expectancy to your bank account and grow it, compound